What's up? I'm Dan Fredenberg, and this is another chance encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm here today with Jenny. Is it Guo? Or is it Go?
Goo?
Sorry, which one?
Goo.
Goo. Okay, cool. Good stuff. And I'm really excited. I got some great news for you today, Jenny. We are joined today by my very favorite audience member. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate syndicators, buyers, sellers, investors, all that sort of thing. And you might ask, why would you do such a silly thing? Well, if you've ever heard of private off-market, also called 506B deals, then you'll know that you need to have a prior substantive relationship, and it needs to be documented before you're actually allowed to share these deals with each other. And so we're finding out what's your level of sophistication, appetite for risk, core competencies, and all that kind of stuff. And the exciting part for you is you learn how to effectively communicate on the subject of commercial real estate deals. But before we get too excited with that, Jenny, is there anything you want to say to introduce yourself for a second before we get to business?
Absolutely. Just real quickly, Jenny Goo, managing partner of Vertical Street Ventures, private equity syndication firm, mainly focused on multifamily syndications, and busy mom of two.
That'll do it for sure. Good stuff. So the first segment that I have here, it has to do with the different distinct motivations that people have for getting into their next commercial real estate deal. But before that, I got to say, but wait, check your aid. Jenny, I don't know if you can see through your camera and down there, but there might be this hideous subscribe button, and maybe, they should. It's okay. It's a stupid joke, but I'd use it in every episode. The 5 distinct motivations are much more serious. I've spoken to a whole whack of different syndicators, investors, operators, buyers, sellers, all that kind of stuff. And everybody has their own unique why. But I find they fit pretty neatly into these 5 categories. And the reason why it's important to know the person's motivation, my guest's motivation, is because these deals, they take months just to close, and then it'll take years of operation before you can have like a saleable event or something like that. And so you need to find out what's going to make this person stick around. And I find that these 5 motivations pretty neatly suit the 5 or the different answers that I have. And the first one, it's not really my one. It's preservation of purchasing power. Now, what's that all about? There are people out there who already own a portfolio of assets, and the way that they make ends meet is from the proceeds of ownership. And so the only reason why somebody in that situation is going to be making another acquisition, there's a couple reasons. One is if inflation is rearing its ugly head, then that's going to eat away from the purchasing power of the cash flow. And then the other situation is if they can buy at a steep discount, like if it's a distressed property or if there's an asset crash or something like that. So as I said, that's not me right now. What I'm up to is trading time directly for wealth. Now, what that's all about, and it's all tied into my background, which is I used to work for a CRM company. And then after I worked for that publicly traded company, I started off my own agency. And then from 2014, I was using those IT powers, those CRM mass emailing skills to get in with a company that was focusing on real estate. And the boss was flipping 10 houses a month like clockwork. And I was going like, well, how is he doing what he's achieving? And I realized that when you're a high salary earner or a high wage earner, you're paying more in tax than anybody else. So it hit me, how can I pivot to be more like my boss? and get involved into these deals and get rewarded with deployed capital, aka equity. So that's my big why. But that's too abstract for some people, especially a lot of youngsters. And what they're probably looking for more often than not is to take back their schedule. Maybe it means they want to work fewer weeks per month or fewer months per year, or maybe it is actually fast tracking retirement. But the idea is that you hustle now so that you can take it easy later. That's a pretty enticing reason for a lot of people. But that's not everybody. Some people, they never want to scale back. They're highly ambitious. They want to buy their entire hometown. They want to get that generational wealth to make sure that their great grandchildren never have to hold a day job. And that's why they're going to keep hustling. And that's fantastic. And they're great people to have on your team. But the last group, some people, they're not so much inspired by their own legacy for their name and their descendants, but they've picked a sector of society, or maybe it's animals, maybe it's the environment, who knows what it is. But if you find out that you have a passion to help a certain community, then you'll find there's a financial component to that as well. And so that's why some people are making those acquisitions and contributing to their responsibilities and net worth. But Jenny, as far as those 5 different motivations there, what combination of those would you say describes you best?
Yeah, absolutely. And that's a great way that you just broke that down. I love that. I would say my primary would be that trading time for money, time for wealth piece. Absolutely. Just freedom for me means spending my time how I want, when I want, with whoever I want to. And so just really having the choice. And I would actually say the secondary piece would be this one right here, helping people who need it. Really, I'm sure you would say the same thing, Dan. I wish I learned about real estate 15, 20 years ago. And so wherever I can, however I can spread the word, giving back is, to me, educating others on this great platform of real estate that can generate income and that generational wealth for their families.
I love it. I love it. But of course, it's not all roses and rainbows. And that brings me to the tolerance for risk assessment. Now, if you've ever been involved in a 506B deal, then the securities attorney who was involved in the filing is almost certainly going to insist that you fill out this questionnaire. And the financial questions, they're quite invasive. And it's basically to the point where the syndicator needs to know more about your financial situation than you may know about your own parents' financial situation. But the one question I found on that questionnaire for compliance that I didn't really think served the purpose it was supposed to serve, which is give a reliable answer, it was the one about risk tolerance. And so what I put together is this fill in the blanks question that I think it does a better job. There are many popular investment asset classes, but I think blank is too risky. So Jenny, it can be inside real estate, it can be outside real estate, it can be both if you want to be an overachiever, but what's too risky for you?
I'll do both. I would say in real estate, I would say right now, retail as an asset class is one of the more riskier ones, just given everything that we've experienced over the last several years in COVID. And so unless there is, I'm sorry, not retail, office. Office is the one that would give me a little bit of hesitancy. Given the trends of people not coming back to work. Outside of real estate, and only because I don't know enough about it, is crypto. I just don't know enough. And so to me, that seems risky, especially things like NFTs for a piece of art that I could paint myself. I don't know. I don't know about that. That seems risky to me.
Right. Well, I actually own a piece of art right here. You can see this is, it's really something. And if you're going to do a segue into the section with the Dan Does Deals Commercial Core Competency Cube, you can say that 10 times fast. But if you want your own copy, you could go to dandoesdeals.com. It's completely free. And like a complete dummy, I don't even ask for your contact information, which is the cardinal sin of marketing. You never give away your freebie without asking for some sort of contact information. But the reason why I did it is because I want to make sure there's nothing that stands in your way from printing these out and practicing on your own. It can be with your family, your friends, or whatever. But the fact is, I go through all 6 sides of this die in every episode, because I think that people's future in commercial real estate will hinge on them being able to effectively communicate on how they fit into a deal. And of course, the bonus is that today you get to find out how my guest fits into deals. But let's get started. The repositioner is an acquisitions person. So they're looking at a whole whack of different properties and they're asking lots of questions. What's this paperwork, you may ask? But anyways, it's underwriting the deal. They're doing the math, they're doing the arithmetic, and they're figuring out, is this deal one that's going to actually make sense? But on top of that, they're also figuring out, is this property even actually making the amount of money that the seller or broker claims it is? Because maybe not. But of course, they're called repositioners. It's a little bit unusual, the term that I use here, but in a lot of circles, you'll call these guys investors and those guys investors and these guys investors. But the repositioner is a little bit special because when they're underwriting, they're also figuring out how can they change the property or how it's run to make more upside. Okay. And the first thing that's a little bit unusual about being a repositioner is you have to have a lot of financier or investor relations. So different bankers, different people who are able to give loans. And the reason for that is because if you can get a more advantageous loan, that goes straight to the profitability of the business and, therefore the building itself. So all of the repositioners have to know lots of financiers, and financiers, they only deal with paper and money. So they are not on the GP team. So the investor relations people who are strictly there, they're not on the GP team. They have to have something else going on. But the repositioner more traditionally is going to be looking for ways in operations to find more upside, to cut those expenses, stop those Benjamins from going down the toilet. But of course, there's more to operations than just unclogging toilets and collecting rents and mowing lawns. One of the contributions that I bring to GP teams is the marketing component. So if you have a vacancy rate problem, even if you are outsourcing to a property manager, you're going to need somebody with really good marketing chops. And then there's the IT side of things for automating whatever it is. So that's a positive part of what I'm up to contributing to operations. But because commercial real estate is such a mature industry, it means there's only so much upside you're going to find as a repositioner just purely in operations. So frequently they'll get a contractor team involved to do a value add, to upgrade those units. The idea being is the next resident would be happy to pay more in rent than the previous one simply because it's a nicer place. But of course, that's all got its limitations. You can sink all sorts of money into the contractor team's capital expenditure and not really get any increase of rent. So you have to be really careful about that. And if you have the same problem that I have, see, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or two, because you betcha that's not going to be me. I'd still be stuck at an airport, push comes to shove, in an hour or two. So you need to have somebody who can be there nearby to make sure that the contractors are using the proper materials and they're not dragging along as far as schedule, meaning that you've got vacant units waiting for another month with no income from it. And they're also taking a good look at what operators are up to, making sure they're not faking photographs and whatever. But when the repositioner has a property in mind, they'll turn around to the financiers and say, hey, guess what? I found this 350 unit apartment complex and it's tens of millions of dollars. You don't have, I don't know, say tens of millions of dollars you want to lend us, do you? Well, the financiers are going to have even more questions than you have right now. And one of the biggest ones they really gloss over in a lot of coaching programs, a lot of guru programs, and that is, who is the sponsor? Who's the KP? That's the question that they don't really talk about too much because they probably want to be your sponsor, KP, if they're their gurus or mentors or whatever. But what's that all about? it's best explained through a little thought experiment. Let's say you're a physician or an engineer or attorney, something like that, and you have decided that, hey, maybe a bunch of us can, in my circle of friends, we can pool our resources, put in 50K, 100K, 250K each, and we'll take over the apartment building that's down the street. Well, the flaw in your plan is that you're not going to be eligible as a team to get a commercial loan on a 350 unit apartment complex unless somebody in the fold already owns a 350 unit apartment complex. So you have to have a similar asset. Now, on top of that, you do have to have a certain amount of liquidity. And then among the ownership team, there needs to be a balance sheet of at least the amount of the loan. But if you check all of those boxes, you got yourself a commercial real estate deal. So Jenny, as far as you and your team goes, I imagine you got some repositioner in there. I'm sure you got the financier relations. You might be sponsored, but I don't want to put words in your mouth. So what pieces of the puzzle do you primarily provide?
Yeah, I dabble a little bit in each area. However, my superpower would be in the operations side of the business. So business execution, business plans, operations, systems and process, so on and so forth.
All right. I love it. I love it. And then that brings me to the next question then, which is about your buy box. And when investors are asking each other, hey, what you're looking for, what you're focusing on, really, I like to ask, it's like, what's easier to say yes to and more difficult to say no to? And there are three parts to that answer. The first one's geography. Where is it? So we need to know which state, possibly which county, possibly which neighborhood. Okay, so the geography matters. The second one's going to be size. Now, most of my guests on Chance Encounters are in apartment complex, which is called multifamily commercial real estate. And when you're talking about apartment complexes, the way you define size is off of unit count. And the reason why that's important is because you'll have a completely different type of team taking over an 8-unit apartment complex compared to the 350, the 100 unit apartment complexes, that sort of thing. So that size definitely matters, even though other forms of commercial real estate, they go by square footage. But anyway, the third part is called class. And my beef with that is they actually mean two different things. It's really more like desirability, but those two different things, the first one is condition and the second one is area. Now, when you're talking about condition, it's how old is the building, how beat up is the building, how up to date is the building, and then of course the desirability, it's like how many luxuries and amenities are there? Is it really no frills, or is it a really, really nice place? So that's the condition. Now, when you're talking about the area, though, you're talking about the school districts that are where the property is located, the crime rate, but the old saying they have is location, 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 when what they actually mean is traffic, traffic, traffic. So if the building is near a lot of traffic, then it's going to be more desirable than one that doesn't have that much traffic. But Jenny, as far as your buy box goes, properties that are easier to say yes to and more difficult to say no about, so what you looking for?
Yeah, absolutely. So we specialize and focus in Arizona, both the Phoenix and Tucson MSA. We have today 17 active syndications in those marketplaces. And we look specifically for, on average, 100 unit plus buildings. So we reach that scalability factor. We look for vintage in the 80s or newer, individual metered, individual HVACs, everything, you name it. And we like and prefer mixes that are hires and twos or even the 3 bedrooms, just because we know that families tend to like larger units, as well as they typically tend to stay longer. So there's less turnover in that type of mix. So class B, B minus to B plus in good neighborhoods, which, as you mentioned, Dan, good schools, lots of retail, high traffic. So in nicer areas, so that we can ensure that that market rent is feasible.
All right, awesome. So then the next question has to do with people. And my favorite part of commercial real estate is that because it's multifaceted, it means that nobody's going to be all 6 sides of the die for any meaningful amount of time. And so because we do have to assemble these teams, it really is something, because everybody's eager to make referrals and build new teams, even if they're not included themselves. But because we have our own unique skill sets, we're better suited to help some people more than others. And me personally, it's the sponsors and KPs that I'm always eager to talk to because of my marketing and promotion background that really stemmed from my IT background. And so I'm always eager to talk to people who already have some sort of foundation, rather than a lot of people, like when they get into being a local or repositioner, they need somebody who can put in 80-hour weeks. And I'm the smarter, not harder type in that sort of sense. But Jenny, as far as who's out there, you mentioned you had a bunch of syndications. So if you have any 506B deals going on, make sure you don't mention that, because the SEC will get ants in its pants. But as far as the people on the die, who's in the audience who you're disproportionately well suited to help?
Yeah, well, all of our deals are 506Cs, so for accredited investors only. But we typically, a lot of our investor database are busy professionals, W-2s, working families, both parents are working, all the way up to people who are ready to retire and throw in the towel. And so our investors love the fact that we have different classes available in our properties and in our opportunities. We have a Class A and a Class B. One's, debt only, no equity. One has less preferred, but upside on the back end. And so typically, we start with our friends and family, but we've grown our networks to come from things like referrals, as well as, given our track record, we do attract a lot of the more sophisticated investors as well.
Mm-hmm. Excellent. So then the question is how to reach out. And for me, I got this distinct last name. It makes me really easy to find, especially on LinkedIn, where I got a brand new badge. It calls me top commercial real estate voice, and I'm totally stoked about that. So thank you, LinkedIn. But if you scan this code right here with your phone, this QR code, that brings you to the FAQs page of 506BME, which is the platform I offer the IT, helping you guys out with documenting your substantive relations with your investors. And the idea is if you get to a certain number in assets under management, the SEC will audit you. And what they're going to look for if you did 506B raises is the documentation showing that you knew people before you shared your private deals with them. So that's what that's all about. You can check out the FAQs page. But Jenny, if people want to reach out to you, social media, website, phone, email, what are the best ways to reach out?
Absolutely. Our website, verticalstreetventures.com, has all of our track record, history, all of our deals on site. I'm on LinkedIn, like Dan, Instagram, Facebook as well. Just take a look and contact me. I love talking about real estate, so happy to help where I can.
All right, beautiful. And then the last thing, it's actually a public service announcement. It's not for you, Jenny. It's for you in the audience, which is if you've been watching this episode and you have been experiencing searing pains in your eyeballs and migraine-like symptoms, I'm confident that it's the hideous subscribe button's fault, which is down there, and it doesn't cost you anything to click on it. Well, if enough people do it, then YouTube will start paying for these videos instead of me, and I think that would be amazing. And as I said, it doesn't cost you anything. All it does mean, though, is my videos may show up on your list of suggestions, but you can go ahead and ignore those suggestions. I just appreciate the fact that you spent this time with me. Just like Jenny, I appreciate you joining me today. This has been great getting to know you a little bit better.
Absolutely. Thanks for having me, Dan.
Sweet.
Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.